Hi, this is Julie Vogt along with Eric Gallagher, Jordy Figueres, and Ann Moore, and we're with the Burke and Road Institute at Tulane University's Freeman School of Business in New Orleans, Louisiana. We're here today to talk to you about Energy Partners. Energy Partners is an exploration and production oil and natural gas company headquartered right here in New Orleans. The company has 9.65 million shares of common stock outstanding. Of those shares, 5% are held by insiders and about 80% are held by institutional investors, but we'll discuss that in a little more detail later in the presentation. Additionally, Energy Partners has an enterprise value of $470.16 million and an estimated reserves of 36.8 million barrels of oil equivalent, or MMBOE. The company's strategy for growth is to acquire proved, predominantly oily assets and to exploit those assets and get them producing as quickly and efficiently as possible, because in a company like this, production means cash flow. In calculating expected future cash flows, we considered Energy Partners' existing reserves, proved and probable, as well as the company's average asset depletion rate at its drill sites, anticipated future acquisitions, and forecasted price of oil and natural gas. As you can see with the model we have here, we anticipate future cash flows to continue to grow until about year 2017, and then level off a bit. Of course, this is dependent upon future acquisitions that Energy Partners actually does make. In order to calculate Energy Partners' 12-month target price of $21, we used a PV10 model. The PV10 is the predominant method of valuing oil and gas company exploration and production. Our stock is trading at $14.06 per share. Taking our forecast and valuation into consideration, we have set a 12-month target price for Energy Partners of $21 per share. This is a 12-month rate of return of 49.36%, a definite market outperform. Here you can see Energy Partners' stock performance over the past 2 years. Its stock is traded at $8.61 on November the 18th of 2009 and $14.06 on November the 17th of 2011, a 63.3% total increase over the past 2 years. Additionally, the company traded at its 52-week low of $10.29 on October the 3rd of 2011 and its 52-week high of $18.41 on April the 4th of 2011. While the economy's tepid recovery has played a part in Energy Partners' stock performance, the major contributing factor was the company's newly reorganized capital structure. Energy Partners operates primarily as an oil and natural gas exploration and production company in the Gulf Coast region. The company can be classified as acquire and exploit company. The company operates mostly in low-risk legacy fields off the coast of Louisiana, East Bay, Greater Bay Marchand, Main Pass, West Delta, but it also has limited holdings off the coast of Texas in the western areas. In 2011, Energy Partners made 2 important acquisitions. The first, Anglo-Swiss Offshore Partners, or ASOP, was acquired in February for $210 million. This property has 8.1 million barrels of oil equivalent total proved reserves, and 84% of those are oil. This represents production of 3,000 barrels of oil equivalent per day. The second, Stone Energy, was acquired by Partners. We felt that it was important to first identify what makes a company a peer. In selecting peers, we focused on companies with similar operations, location of operations, and company age. We also looked for companies that reinvested cash rather than paying dividends to shareholders. You will see that the peers we included for our analysis are PetroQuest, ATP Oil and Gas, Energy 21, McMoran Exploration, Stone Energy, and W&T Offshore. Some notable figures here are the price-to-earnings ratio and the price-to-book value ratio. You will see that Energy Partners has a significantly higher PE ratio than its peers, which indicates that investors have confidence in future company earnings. It also has a comparatively low price-to-book value ratio, which would indicate undervaluation or inefficiencies of operations. As I mentioned earlier, 5% of Energy Partners stock is owned by insiders and 80% by institutional shareholders. Listed here, we have the top 5 institutional shareholders, with Wexford Capital holding the largest position at 17.58% of Energy Partners' outstanding shares. This large proportion of institutional shareholders is a risk to Energy Partners' stock price. One of these institutional shareholders were to decide to liquidate its position in the stock, it would have a very significant impact on the price of the company's stock. On Friday, October 14th, our analysts met with Energy Partners analyst Kaiser Harris and Chief Financial Officer TJ Tom. Of the questions we hoped to have answered during our site visit, we were most interested in the ones surrounding the company's Chapter 11 filings back in 2009 and what changes defensive debt service Energy Partners was able to focus on company growth. In fact, Energy Partners recently made a repurchase of $20 million of its common stock. This not proceedings with a newfound focus. The company targeted shallow water drilling for oily assets in areas with proved reserves. With available cash, Energy Partners is pursuing a disciplined strategy of acquisition and exploitation. We left our meeting confident that the problems that plagued Energy Partners had been rectified. So taking all of this information into consideration, we'd like to reiterate that we believe that the 12-month target price for Energy Partners is $21 per share, a 49.36% 12-month return, and a very solid market outperform. Red reports are solely part of an educational program at Tulane University's Freeman School of Business. The reports are not investment advice, and you should not rely on them in making any investment decision. You should consult an investment professional and/or conduct your own primary research regarding any potential investment.